Hello everyone, it's Davide here and welcome back to Learning Finance. So in today's video, we have to talk about a couple of things. Now, first of all, what a bounce that we have had in the last couple of days. The Nasdaq and the S&P, obviously, they showed strength. In the video I made on Monday, I told you how, in my opinion, especially on the Nasdaq, this ABCD correction was about to end. I told you how, in my opinion, this long-term positive trend line was very important in terms of support for the market, and it was important to maintain it in order to avoid potential weakness that was not just short term. Okay, so it's interesting to see that the market had the strength to do that. And we saw the same stuff on the S&P. If you remember, I told you how the S&P alone was probably still having some room for another 1.3, 1.5 downward movement. However, that's why I don't just take a look at the S&P, but especially the Nasdaq as well, because in my opinion nowadays tech stocks are what drive the market. Even more interesting is to see Alibaba that for the first time is showing strength. We are trying to break this 152, 153 resistance area. A closure today around this level would be, in my opinion, a first little sign of a potential shift from this drastic and devastating move. Okay, anyway, it's just the first step. We have lots of roads to cover. Okay, so in today's video I want to talk about that, this whole Chinese stuff situation. And obviously the only thing I ask you guys as always is please leave me a like. It's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. Now, first of all, guys, let's take a quick look at the Nasdaq, which I told you, my opinion, was about to bounce. I explained to you why. We saw that coming. We saw the correction coming. Now, is the risk of a further correction finished? Well, what we have to say about that in terms of technicalities, one important thing is that the Nasdaq went above the 4,770 level, which I pointed out a couple of weeks ago over there. This level is important, in my opinion, to avoid the risk of a further correction. Does that mean that the Nasdaq can make now all-time highs? No. Okay, in order to do that, we have to break, guess what? The very important level over there at 15,356. That I told you 1 week ago how it was important to break that, otherwise we would have risked another leg down. Okay, so this level is still intact, is still there, and to make all-time highs we have to break it. Unless we don't break that, the market can just stay inside this rectangular figure and basically do sideways move, okay, for a while, which, by the way, after this crazy run will not be something strange to see. Okay, so keep an eye on those two levels. Now, Alibaba stock. Today we are having a huge bounce driven by what? And here it comes the beautiful world of financial news, which if you follow the channel, obviously you know that I don't like it. I find it completely useless. Well, if we just go on and try to search and read, for example, Yahoo Finance, what they tell us is that Chinese technology stocks, they are gaining as the risk appetite is increasing with Asian stock market. They tell us that according to them, the Chinese technology stock rebounded because the shift in sentiment was fueled by a report that Charlie Munger's Daily Journal Corp had increased its Alibaba stake. I mean, do you think that this is why Chinese stocks are rebounding today? The good old Charlie, which obviously maximum amount of respect for him, but is this something that makes the market move? In my opinion, absolutely no. Now, I found something probably more interesting that can explain the situation a little bit better. Anyway, I'm telling you that. Why? Because the news, when they come out, they are always late and most of the times they are useless, meaning that they don't tell the truth. Okay, now here is probably something a little bit more realistic. Now, first of all, why Chinese stocks are crashing, okay? Because every time I see sometimes down comments like, can you please make more videos about fundamental analysis? What's the fundamental analysis? Guys, the fundamental analysis doesn't change. Why I'm making more videos with technical stuff and short term? Because what should I tell you guys? It's always the same stuff, okay? The fundamental analysis of Alibaba has not changed since basically 1 year ago, okay? Has probably only improved. The fair price, in my opinion, is still this, and it doesn't change. So I cannot make video telling you always the same stuff. It gets boring and it doesn't add value to anyone. Right now, Alibaba, I'm talking about Alibaba, but other stocks like JD, Tencent, they are all undervalued. In the case of Alibaba, we have a fair price of $180 per share if Alibaba doesn't grow in the next 8 years. An average growth rate of 1.5%, basically just the inflation, in revenues, a discount rate of 11% gives you this fair price, 180, meaning that Alibaba today is undervalued with the scenario that it will not grow in the next 8 years. So, is it undervalued? What do you think about that? Obviously it is, but the market didn't give a damn, and still today don't give a damn. Why? In my opinion, those two are the huge reasons. First of all, Chinese regulations. We don't have a clue. There is no transparency. We absolutely don't know what's going on in China. When you know it, it's too late. And all the news medias and stuff, they all tell us bullshit, meaning that they have no clue what's going on there. To really know what's going on there, you have to be a member of the government. You have to work in that space. This has been a massive problem with Chinese stock market. I told you since probably the first video I made about Alibaba, if you go back months ago in the channel. So the market doesn't have a clue how to calculate the regulatory country risks. We don't know. Second, obviously US tensions, even though I think that it comes second to the Chinese problem, okay? Most decent news that I found is that Chinese stocks are up because US official and Chinese official, they had a meeting in Switzerland. What came out from this meeting is a positive and constructive speech talking about collaboration. We saw the two main problems. This article goes to it in the number 2. So why I'm telling you all of that? Because obviously you say, yeah, I already know that. But the truth is, I'm telling you that because no one knows. And the market today still doesn't know what will happen with Chinese big tech. We don't know, so we can go there and basically do all the fundamental valuations that we want, but we are still thinking with US corporation mentality, meaning that US companies, big companies, they can have problems, but at the end is always business as usual. Will this happen the same in the Chinese market? We don't know that, okay? Now, according to how you answer this question, if it's yes, then obviously Alibaba is extremely cheap, as well as Tencent, as well as JD, as well as all that kind of stuff. But the market doesn't know yet how to answer this question. So is now the time to buy Alibaba? Well, if your answer is yes, big tech, Chinese tech will not have problems moving forward, then absolutely yes, it is the time to buy Alibaba. What is the risk? The risk is that I don't even know if it is possible, but the risk is that the Chinese government really wants to bring forward this idea that big tech corporations are bad and don't like for them to develop too much, okay? So there is still this risk. The market knows that, and that's why stocks are still priced that low. In my opinion, once we will have a clearer view on this, those companies can really explode. So you obviously know that I still have my position in Alibaba, my position in JD. Why? Because for me, the answer to this question is that they will not have problems moving forward in the long term. So that's what I expect. They're big companies, they will adapt to changes in rules, but they will thrive moving forward. So that's why I am still holding Alibaba and JD. But in terms of giving you an answer, It's all about you. It's all about the risk and reward. And what do you think about China? Do you think that the Chinese government will do at the end as the US government does? Or do you think that their system will effectively change in terms of how things work in the economy, okay, compared to the US economy? So it's all about that. I cannot give you an answer. You should give an answer by yourself. If you believe in the long term, obviously, buy Chinese now. Yes. Why? Because no need to explain that in terms of Alibaba's business and potential and things like that. 300 billion, it's a ridiculous valuation. But no one knows the answer to that particular question. And a lot of things that we see, in my opinion, is also exaggerated about China. Probably is a problem of the Western news and stuff like that. But it is very difficult to find an objective answer to that right now. So this is why the market is still depressed and still doesn't know. Why am I looking at prices? Because the only way for me to understand if the market and how the market wants to answer to this question is to see what the prices are doing. And in my opinion, Alibaba needs to break this downtrend line over there in order to give us a first sign of strength and a first sign that probably long-term things will not be as bad as we now think. So that's my answer to you. Is it undervalued? Absolutely. There is still, however, this big question here where no one looks like to have an answer right now. So I hope you find the video interesting, guys, and leave me a comment below. Tell me what do you think about that. Subscribe to the channel if you want, and as always, guys, have a wonderful day.